Good Monday. This is Jay Brew, co-chairman of Seafreedom Brew. Can we believe how quickly 2015 went by? It was a year of growth in the community banking industry, a thriving growth that in 2016 is somewhat changed because of what the Fed did here last week. And of course, with the expected increase in rates is that the Fed and the blue dots still looking towards what they consider to be normalization up to a normal Fed fund rate of 3 to 4%. But last week we talked about maybe it's the new normal, and we won't see rates getting up to those levels until this economy picks up steam. So what did interest rates do after the Fed raised rates in here? Well, interestingly enough, 3-month T-bills, which hit almost a high of 0.3%, actually declined to 0.2%, which is interesting in here, especially with everybody being so nervous about what the Fed was going to do, that the reaction afterwards was to see a decline in rates that was pretty incredible on percentage terms. Along with that, we look at one-year Treasury rates, once again declining in here to about 0.65%. So the same type of situation as we saw with the 3-month bill rates. 10-year rates also declining in here somewhat down to a 2.20 where we got up to about a 2.35. So when we think about that, what are we going to do about raising interest rates? And so what I would do is to go and say, well, what did money market rates do in here? And here is where we've seen an increase since November, getting up to right around 0.2% in here. So there has been an increase in money market rates, and once again, it might continue upward because of the lag in their investments. But what, once again, does that mean in terms of you raising deposit rates at your bank? And my feeling is that essentially community banks do not have to lift their rates in here because their overall cost of funds and their cost of deposits is a 0.53% on average for all the community banks around the country. And I've argued that this should have been lower, but because of competition, etc., staying upward above T-bill rates, well above T-bill rates, and also were money market funds. So I don't see any competitive push in here to increase interest rates. When we think about 2016, we'll be coming back to you in the first week in January, and we'll be talking about what strategies do we need to employ in 2016. Do we need to anticipate higher interest rates? So from all of us at Seafreedom Brew, we give everybody a wealth of Happy New Year, and we'll see you in 2016. This is Jay Brew, co-chairman of Seafreedom Brew. Have a great week.